Hi, how's everybody doing today? This is Rich here on behalf of Rich TV Live, and I'm here with a very special guest. It is Paul Ghezzi from Kontrol Energy Corp, the CEO. How you doing today, Paul?
I'm great. Thanks for having me.
Oh, thank you for coming on the show. We're really excited to speak with you. We've talked a lot with some of our community about Kontrol Energy recently, and we've been breaking down the company, but we want to hear exactly what you have to say, the CEO of the company. So why don't you tell us a little bit about Kontrol Energy Corp?
Absolutely. Control Energy is an energy service and technology company. And if you think about the market we serve, it's about a 90 billion square foot real estate commercial building sector across North America. That's about a $200 billion annual energy market with about 30% in inefficiency. So that's the broader market we serve, and we do that through technology and services. And our sector is basically going through a massive consolidation, and we're part of that. It's very exciting. Our growth has been off the charts. We'll get more into that as we go along, but very excited to share our story.
That's great. And we here at Rich TV Live, we've been following the cannabis sector for quite some time, over 2.5 years, and it's
Great.
really been growing exponentially. One of the biggest issues that these cannabis companies have is they spend too much money on electricity, which is where I feel like you guys are a perfect suit. So, why the focus on the cannabis market? Is it because of the electricity costs?
Yeah, so great question. So if you think about cannabis, you need a building to grow something, right? Those are the rules in Canada. You're not growing in open fields. So if there's a building and there's an electricity and energy component, we can service that's part of our control energy story. The challenge of the cannabis industry is about half of your cost can go to energy consumption, right? It's a very expensive. You're running 24/7. It's kind of like mission critical. Nothing can go wrong. So we were a little late to the story in that the story started around 2014, and most of the plants were built around that time. So we're coming in, say, around 2017, 2018, looking at how to improve efficiencies and make operations stronger. The one thing about the cannabis sector is, to be frank, they were rewarded to grow how much they could grow, right? The market didn't really care about operating efficiency. I would say in the last 4 months, that's changed where investors are now saying, show me how you're going to be profitable.
Yes.
So part of being profitable is you got to get your costs under control outside of what you're growing. And energy is a big part of it. So we're in the space, we're very active. One of our challenges is when you're working with a large customer, they typically don't want you to use their name. And it's because, it's very competitive, it's consolidating, and, there's not much you can do about that other than do the work and make the customer happy, right? So we're
Abs-
excited to be in this space. It's a great space.
Absolutely. And it's a growing space, and you guys are providing a need that, like you said, up to 50% savings is enormous,
Yeah.
enormous savings. Now, can you elaborate on your partnership with Toyota to Social Canada Inc.?
Absolutely. So Toyota Show is a subsidiary of the larger Toyota Group. And Show is about 80 companies globally that were created, about 50, 60 years ago to essentially support all the plants globally. So we're dealing with a part of Toyota that has a mandate of supporting the plants and improving the plants. So we did some work with Toyota about 2 years ago on distributed generation cogen for large apartment buildings. It was their engine, and it was our kind of technology coming together. So they were very impressed with what we could do in a building, and we call that our smart building platform, where we're taking new forms of energy like natural gas and replacing it on the grid, and bringing the cost of electricity down. So they said, could you do this in a factory setting? And of course, the answer is yes, because a smart factory and a smart building have many similarities. So what happened was we announced the partnership around March of this year. We've been in a number of pilots. Some of those pilots have now exited. We're going to get POs. And essentially what we're doing is we're taking old, in very simplistic terms, dumb factories where there isn't a lot of technology surrounding the automation, right? Most of the investment's been made in the automation part. Now, surrounding that, we're adding technology where we can manage in real time, review savings in real time, add sensors across the floor, anything they need to be more productive and efficient. So that's where Toyota has become a channel partner. They've got about 200 factories in North America, and we're slowly getting through a number of factories. And what we hope to do is as we sign up a new factory, we make an announcement, right? In our model, each factory is worth about $1 million of retrofit. So going from dumb to smart. But the way that works in a factory setting is you don't get the $1 million up front. You're doing retrofits over 5 years, and it's a capital improvement. So it's the longer part of our business, but it's very exciting. And, to be selected by one of the world's global leading brands to be their partner in retrofitting and making their factory smart is very exciting for us. So we're very bullish on that.
Absolutely.
Very bullish. Yeah.
Absolutely. Everybody knows Toyota. So
Right.
that's pretty exciting. And I also noticed when I went through some of your clients, you guys have some huge clients like TD, WestJet. I mean, how did you get all these companies? Did they approach you? Do you guys have a sales team? Like some huge,
So
huge names.
there's really two parts to our core story. One is the organic growth through our technology, which we'll get into. And the other is we make strategic acquisitions that fit our business. So typically when we're doing an acquisition, we're looking for a fantastic customer base that comes along with that acquisition. So the other part of our business, which is aligned with energy, is we do a lot of work in odor, emission, and stack testing. And that part of the world is basically driven by compliance, right? So if you have, for example, a Lafarge and they have to comply with the government, and we're doing that testing, that Lafarge becomes a customer. And then what we want to do in our platform is to spread those cross-sale synergies across multiple different customers. So we have a very blue chip customer base that's growing. And part of that is organic and part of it is strategic acquisitions.
Very good. And that goes into the next question. Are there any other future partnerships in the pipelines?
So we're always, as a public company that wants to grow very fast, we're always in discussions. Our challenge is, given our size, you have to be careful not to have a partner who's going to take over a certain part of your business, right? So the idea is scale into partnerships where we've got some strategic leverage. So we're in numerous discussions, good opportunities that when the time is right, we'll announce them. But we're very careful in our platform that, and we'll talk about our share structure later, but we've got a really good structure. We're growing the business. We don't need to take any more risk than we're taking. And from that perspective, a strategic partner can be an amazing partner to your bottom line and your top line, but you also want to bring on the right partner, who's going to take over that part of your business. So we're being very careful and strategic, but lots of opportunities out there for sure.
Absolutely. Now, early in July, you announced Kontrol Energy received $550,000 contract from a real estate management company. Can you please tell us a little bit about that and what this means for Kontrol Energy?
Sure. So that's a new customer, and that's why we announced that. And it's an exciting upside potential. That's one contract. There could be more. And essentially what we did in that situation was we took a very inefficient building running on old boilers and no technology, and basically improved the boiler system and layered in our technology, which is we have a software automation system, which runs a software as a service. That's about $1 million a year. If you look at our business, we don't get the value that we should be getting for that software as a service platform. And the feedback from the market is, well, we'd like to see you grow that a little bigger, get it to 2 or 3 million. So that's what we're working on diligently. So that software as a service combined with the work we did in making the building more efficient ends up saving the customer about $200,000 a year. Wow. They're very happy with us, and it opens up their other buildings in their portfolio.
Wow, that's impressive. Now, what are Kontrol Energy's plans with entering in a indicative term sheet with institutional lender and updates on convertible debenture terms? Any expansion plans in horizon?
Yeah, so we are constantly looking at acquisitions. So we've got one on the go, which is in the very late stages of closing. So that probably early Q4, that's what that financing relates to. So that would add about 6 to 6.5 million of revenue.
Wow.
650 of EBITDA. So it would take us into the mid-20s in terms of run rates. We're very excited. Acquisitions can always take a few months longer just because of the process and the red tape, but that appears to be on track for early Q4. And beyond that, we're always looking. We've got lots of opportunities. We're being very careful. But there's a consolidation happening in our part of the industry, and we want to be part of that. And if you think of, often investors say to me, well, in the cannabis sector, there wasn't really consolidation. And I said, you have to really look at the large cannabis guys. They were on a buying spree, right? I mean, they grew their business through massive acquisition. So
absolutely.
It does work if you do it right, and that is part of our business. And there's nothing wrong with acquiring other companies that add value.
No.
And so that's part of our story, right? And I'm not sure if investors really understand that in the cannabis sector. So it is a question I get quite a bit is, well, why didn't you see that in the cannabis? I'm like, well, take a look at some of the financials. There's like 80 acquisitions, at some of the big guys. So we're part of that. We think we can accelerate our growth through acquisition as well.
Very good. Now, can you tell us a little bit about Kontrol Energy's team and how they strengthen the team?
Yeah, so we have a very tight operational team at head office, and then we run our operating subsidiaries with a president. That president reports to head office. So at Kontrol, you've got myself as the CEO, Christian Labro as the COO, Claudio DeBasso, the CFO. And the idea in being public is run a very tight team, keep your structure very sound, and then we run our operating subsidiaries with the president. I think talent-wise, what we're going to be looking for in the short term is a CTO, so a Chief Technology Officer. We have some exciting new technology developments for the fall coming up. So I think a CTO would strengthen our team, and we're always on the look for talent, but you have to be careful when you're public in that in our sector, you have to try and be profitable, manage your expenses, and manage your growth. It's very difficult to do.
Yes.
But the idea is you keep your expenses as low as you can, you grow as fast as you can, and you add talent over time.
That sounds like a good plan. I like the way you guys are going.
It ain't easy, but that's the plan.
Well, when you talk about growing through acquisition and building a strong team, it reminds me of a company like Google. I mean, Google, they just buy everybody, right?
Well, see, most people don't say that. They forget that, right? So people in small cap Canada, you get this aversion to acquisitions where it's like, why are you acquiring that company? I'm like, think about some of the largest players in the market. They're constantly acquiring, right?
Absolutely.
So the idea is it has to be a good acquisition, it has to be strategic, it has to add value. And there's nothing wrong with adding that part of growth to your business, which we really like. And that's helped us grow for sure in terms of our numbers.
No, I like it. I like the growth model. I like the acquisition model. Reminds me also of Berkshire Hathaway, Warren Buffett's company.
Right.
I mean, his entire business model is about acquiring other entities.
Right.
Right. And utilizing convertible preferred shares, having a tight share structure, and
That's
using
right.
those preferred shares to house value. So I really like that business model, and I think you guys are on the right track. Now, one of the questions that our audience has, and it's even something I was interested in, is who are some of your main energy competitors, and how do you stand out from the pack?
Sure. So if you think about our market in particular, you've got groups like Honeywell, Schneider, Ameresco, kind of the big, large integrated technology equipment companies. They're also service companies.
Yeah.
On the small cap end, it's a very fragmented market. So you have hundreds and hundreds of companies that provide a small type of service into a building or a portfolio, and then you have the massive integrated players, and there's very little in between. So what we're going to be is that in between company with 150 million of revenue, and the likely scenario for us is we get taken out by the $2 billion company. And we've seen this across different sectors. When the sector starts to consolidate, it happens very quickly. And if you only have 2 or 3 million of revenue as a small company, you're going to get shut out, from competition. So our goal is to look like our big competitors and be acquired by them over the next 3 to 5 years.
Oh, that's great. That answers a lot of our questions. Because a lot of people were wondering if you guys were looking to be an acquisition target. So I think you just answered that.
Absolutely, yeah, for sure.
And there's nothing wrong with that. Now, if there was one thing you would want shareholders to know about Kontrol Energy Corp, what would it be?
So, this to me is the most important thing is when you make an investment, you're investing with management. And what you have to figure out is how are you aligned with management? So first point is we own 48% of the outstanding shares, right? And we're not going anywhere. We're in this to create a huge win. So for us, a huge win means multiples of where we are today, minimum, right? We're not sellers, we're buyers of our own stock, and you can see that we're buyers. The second thing is when you make an investment, you really have to look at share structure. What happens in Canada is people go crazy for volume and trades, which is fine. If that's part of your portfolio, I'm not judging that. But if you really want to make an investment and you're buying into a $200 or $300 million share structure, well, guess what? When all those people decide to sell, you're going to have a hard time.
Yeah.
So we've only got 29 million shares outstanding basic, which is one of the tightest structures in Canada. I will say this honestly, we've gotten no reward for that. I've been asked, double your share structure, triple it, get it trading more. And I'm saying, well, what's the purpose of that, right? we're building value here. This is long term, and so I think in Canada, what happens is people forget the number of shares actually does matter over time.
Of course.
And you know
Absolutely.
that, right? Over time. So I look at that. If you can understand what we're doing, you can understand our structure, you can understand where we want to go. Now you can make an investment that makes more sense. And we're building long-term value. We're not so concerned about the short term, right? It's about, you can't build a business in 4 months. You have to make rational decisions over time. And if your share structure is sound and management's fully invested, I think you got a better chance of making money in your position over time as a shareholder. Now, if you're a trader, that's totally different. We're probably not the best trade in the market, but we are building long-term value. So if that makes sense to you, that's kind of what I would focus on in terms of control.
Well, it does. I'll give you an example of a company that we've been speaking to a lot in our communities called Cannabis. And you mentioned 200 to 300 shares. They've got about 272 million shares fully diluted. Right. And they have an insider. They did an RTO, and one of the insiders from the previous cannabis company that amalgamated in the RTO is selling, publicly selling 25 million shares.
Right.
And I can't tell you how much negative pressure it's putting on the stock. I mean, it's just constant selling, and it's driving the price down. So I totally agree with you. You need to keep the share structure tight. And if you keep the share structure tight and you don't have insiders dumping 500,000 shares a week, then you have a better chance of the stock going in the right direction.
That's right.
You guys are buying shares.
We are. Is it? We believe in our company. You know, I can say this. I don't know what the share price should be, right?
Yeah.
But when you're buying, you believe you're undervalued. That's the message we're sending. We've been buying some of our own stock through an issuer bid. And so, you know, what happens in a company like ours is because you're building value long term, you know, we're not in the market every day. I don't do interviews like this every day, right? We're busy building our business. And not a lot of people know about us. So we're kind of a story that hasn't been told. And my thought was, why don't we wait until we get more performance on our revenue? So we've gone from, you know, we started this thing in 2016 with 1.9 million of revenue. We're on a 16 million run rate. We'll go to 23 with the acquisition. So now we can go out and talk about what we've done. And I think that's very healthy, right? And now keep the share structure very sound and tight. And now you've got a platform where you can have future expansion for shareholders, right? And what I say to shareholders is if I win, you win. We all win together. And you talk about that insider dumping in the cannabis sector, right? If that guy's ACV is 20 cents, you got a long way to go before you clear them out.
It's a very scary situation.
And that's why I thought, you know, the message for control is really keep this tight, do it right for shareholders. But to be honest with you, and to be frank, nobody cared up until about 4 months ago because it was a volume-based market, right? So volume dictated what was reflected in your stock, which doesn't really make a lot of sense. But I understand in periods of, you know, FOMO, it's exciting, right? You know, people want that trade, but really you make money in a business over time, right? And,
of course.
There is no business that's built in 3 months or 4 months or 9 months or 15 months. I mean, the cannabis guys are probably now in their 5th or 6th year, right? And now you're seeing what the real business looks like. And they're under pressure as well to deliver profits.
Yes.
And share structure, what I always say to investors every time I meet an investor is share structure matters. So have a look, right?
I agree. I think share structure is probably one of the most important aspects of a company.
Right.
I mean, you can just look at any market maker and they'll look at the share structure first. They'll take a look at the debt. They'll look at look at the equity. They'll look at you know, the issued outstanding shares. They'll look at the insiders that are selling. They'll look at the management that's selling. They'll look at the management that's buying. So I really think you guys have an interesting story because it's very few companies I see that are actually buying shares, especially in the early stages like you guys are.
Right.
So you guys are doing a good thing to support the stock. I like that. Now, with the way things are going, it looks as though Kontrol Energy Corp is primed for a huge 2020. Can you tell us some of the things that are coming up for the rest of the year?
So we've got a number of exciting initiatives. We just entered the plant-based protein sector.
Oh, wow.
And
Beyond Meat, like Beyond Meat. Yeah. Oh, yeah, I like that.
Hopefully we'll have some news on that.
Wow.
We're working with. And essentially what we're doing there is providing integration equipment to better manage the process and evaluate, right? And that's through one of our subsidiaries, which is very, very well known for doing that. The Toyota 2 show is going to accelerate into the US, so we're very excited about that potential. We're constantly looking for acquisitions, and I would say, a larger acquisition is on our horizon. I can't say when, but for a company doing say 23 to 27 million in revenue, if we went out and did a $30 million revenue acquisition, that would take us to 60 million, and now you've got a big board listing on the table. And so that's really when the magic starts to happen. So fundamentally, we want to graduate from small cap to mid cap to large cap, and that's going to be driven by organic growth, acquisitions, great structure, and graduating from the small exchange to the main board. So that's all in our purview of 2020. Of course, when it happens, you announce it, but that's how we're thinking about the next year. So it could be a very pivotal and exciting year for us. And I think, the hardest part in any kind of business, especially when you're public, is to lay a solid foundation, right? If you rush, what ends up happening is you make a lot of mistakes that you can't fix.
Yes.
And share structure is just one of them, right? So we've laid a really solid foundation. We've taken the hard lumps. With this foundation, we can now get to the next level with a little bit more ease. It's because we've done the hard work. It's easy to do the thing where you just print more shares and you raise money. Makes people happy for a few months, but it doesn't really build the business, right? So that's why 2020, is all the hard work that we've done from 2016 is how we're looking at it.
Oh, you're doing the
Does
business.
that make sense, or?
Yeah, it does. You're doing the business the right way. You're not focused on diluting the stock to raise capital, which is what most companies do. And the reason why the stocks get crushed and the reason why shareholders lose money. You're focused on building shareholder equity, shareholder value by growing the business through acquisition and growing through revenue. I think
now we do use debt to fund, but when we started this, our view was if we could get to a 75 debt, 25 equity structure, the short term to build the growth, that's fine. So we can do that. Over time, we'll get to 50-50. So, one of the knocks against us is, do you have too much debt? And our response is, well, we're using debt to buy cash flow growing companies. So that's okay. We recognize over time that we'll get that a little lower, but right now it's kept our share structure to 29 million, which is one of the best in Canada. And so we'll transition away from the debt over time as we grow, but right now it's served us well.
And you plan on paying the debt off with the cash? Is that how you plan on transitioning out of the debt?
It's a combination of internal cash, a proper equity raise, institutional at the right time. So, perhaps when we're getting ready for a big board listing, you bring on an institution, you do a larger equity raise. I think for your viewers, ZBEC is a good example. So ZBEC went from 75 cents to about $1.50 through an institutional round. So at the right time, you bring in the right partners. You do your institutional round, you get the balance sheet to 50-50. And so we think about that a lot, but we're not going to stop our growth because we're waiting for anybody, right? We're just going to keep marching, build the business. And we've been very successful using debt the right way for the right reasons.
Yeah, and I think in this sector and as a public company, if you're not utilizing the financial tools that you have available, why be public, right?
Exactly. If you can't pull the debt, equity lever, or preferred or convertible when you need it, you're really limiting yourself, right? So that's one thing where I think we're pretty good at is using the capital markets in the best way for the long-term shareholder. And that means sometimes you're using a little bit of debt to buy a business. That's okay as long as it's a good business.
That's very good. Can I get into a few questions from the audience?
Absolutely.
So one of the questions is right here. These guys are in Canada or the United States or any international plans. Do you guys have any plans on expanding outside of Canada and the US?
Right now, about 10 to 13% of our revenue is from the US.
Okay.
The rest is Canada. There is an opportunity with Toyota to move into the US and global, but our first step would be US first.
Okay.
And our feeling is the US market is so large relative to the Canadian market that we have more than enough opportunities in the US to look at. We are kicking the tires on some US acquisitions as well, but in this kind of environment, with politics, you have to be very careful not to move too quickly and make a mistake. But I would say Canada and the US are primary, global would be the third market.
There's a lot of interest in solar. Are you guys working with the solar market?
So solar in general, in my view, has become a commodity and very difficult to make money. We're not really interested in the commodity part of the business. We want the high margin, technology or value-added service. So we're not really interested in the solar space just because it's hard to make money in a commoditized business.
Okay, great. Now, I know that you guys put out a press release in May talking about a cannabis company, but you haven't mentioned any names. Is
Yeah.
there a reason for that? Or I
Yeah.
know,
So, unfortunately, we have to sign NDAs that are quite strict.
okay,
And my view is the sector is consolidating. We know who the big players are, and the big players don't want the other big players to know what they're doing in their facilities. It's that simple, right? And it's a highly competitive. As large as the market looks outside, it's very small from the number of players who are going to win, right?
absolutely.
So from that perspective, nobody wants their competitor to know what they're doing at their facility, which means we get no promotion out of it.
Yeah, that kind of sucks. But is that something that will change in the future? Like, will they announce it or will never?
As the industry evolves and consolidates, I think it will change, right? So what you're seeing now is a transition from the early entrepreneurs. It's becoming more institutional, and I think
Yes.
as people kind of stake their claim, that stuff will ease up, and it'll be easier to do some of that. But right now, I would consider it kind of very territorial, maybe a little protectionist. And if we're signing an NDA, we have to live by it. There's
Of
nothing
course.
we can do.
No, I totally understand that. Now, can you tell us how many cannabis companies you have on board?
So we have four right now, and
Great.
looking to grow. We're being selective as well. So what we're trying to stay away from is there are some that are in trouble, right? You can see that in their financials,
Yes.
and you don't want to get stuck with a long-term customer who can't pay their bills.
Of course.
So either if they're cashed up, we're interested in providing some services. If they're looking to raise money, we've been approached by a few that said, would you build us an energy platform, and we'll go raise the money in 6 months. And we're staying away from that now because you might get a contract win that never gets fulfilled or they can't pay. So, if you're cashed up, we're interested, and we're doing work on the energy side and the odor emission compliance side. And so we're covering both those areas.
One question from the audience is, which companies drain the most electricity and how do you plan to land them as a customer?
So I would say the world is split into two kind of buckets. One is people that are excess users of electricity. They want you to solve their immediate problem of, can you get me cheaper sources of energy? So that could be cogeneration with some software management or battery storage. Then there's a whole other group that want visibility into their energy consumption. So it could be because they want to manage it in real time. So they might not be a high user in one facility, but they might have thousands of facilities. So what we do is we approach asset managers, asset owners, industrial, commercial, and we look to scale. So Toyota is a great example. If you can get one facility done, you have a chance at 200. That's just one customer, but 200 facilities, right? So that's how we target it, is we define it in two large buckets: excess users and those that need more visibility in real time and need to manage it better.
Now, we have a lot of members that are watching right now and that will be watching this video. If they have a potential customer, something I was thinking, like if I have a company that has a building, or if I have quite a few cannabis clients,
Right.
is there a way that we could work together to bring you business? Is there some type of...
Absolutely. Yeah. So what we do is we have this really simple approach where we just walk the facility, right? We do that in a day, and we point out the 20 things that need to be fixed, that we think need to be fixed. And then there's that menu that you can start chipping away on. And it really depends. What's happened in the cannabis sector is they're not running efficient businesses because they haven't had to, right? And that's changed in the last kind of quarter.
Yes.
So now there's this new feeling around, we better get more efficient in the way we operate.
Yes.
But to be honest, up until 4 months ago, it didn't matter.
Yeah.
All you had to do was keep growing their footprint, right?
Yeah, you didn't even have to show profits. You could show losses and nobody cared.
Nobody cared. So if you weren't being penalized, well, why would you do anything?
Exactly.
Right? So that's changed. So we're happy to do that. We think we can add a lot of value because we've been in a lot of facilities. So we know how things should be operating, what they should look like. We know when there's a problem with the energy. And we're always happy to talk to new customers. Absolutely.
Fantastic. And a lot of questions are being asked about how you save the money. So you still work with the hydro company, but
Yeah. So
how does, like, maybe you can explain a little bit about how you guys operate.
Sure. So let's use a real example, right?
Sure.
So let's say you're a cannabis grower and you're drawing from the hydro company.
Yes.
You're going to pay the highest rate because you're a constant draw, right? So the constant draws pay the most. So what we would do is come in and likely install a cogeneration system, which is a combination of natural gas and heat and cooling. And then we would wrap our software around that, which is a very automated real-time software, which is constantly looking for savings and efficiencies. So you've got a spark spread between the natural gas and the electricity, which is quite high, which basically means it's in your favor. And then you've got the software automating all that in real time and giving you constant feedback. So through that process, you'll save 50% of your energy costs annually, and you'll have a 3-year payback, which essentially works out to about a 33% internal rate of return, which is very high, for any operator. And those are the discussions that we're in now. As I said, we were a little late. So the original operators all built their facilities. So now you're going back in as a retrofit, right? And you're looking at the case study and the use and how to do it. And so that's where we are right now. So that could be a very interesting part. There's also the odor part, where odor right now, if you have a facility that is producing a nasty odor, you're not regulated to fix it. So we have the good neighbor rule right now, where if your neighbors are complaining, you're trying to do something about it. Most industrial facilities in Canada are regulated that they can't emit certain odors. We think those regulations are going to come to the cannabis sector. Once that's regulated, that's the business we're in, is preventing those odors from entering the environment. And so that's happening right now. There's not a big push on that because right now they don't have to. But once they have to, we have a lot of regulated customers like Enbridge, Suncor, Lafarge. The big emitters are all regulated. We think that's where cannabis is going as well.
I agree with you. I think that's very smart. One of the questions was about artificial intelligence. How do you guys utilize artificial intelligence to help your consumers?
So we've got some AI built into our software. The thing with AI, in my view, is it's kind of overblown in terms of what it can do, because if you're in a building, there's only so many levers you can pull to make the building more efficient. So we've got some smart learning algorithms, that look for patterns, and some of it relates to when the electricity is the most expensive, how your building operates. You put those smart algorithms in, and you run more efficient. So we don't overplay that part of our business. We do have that, and you can always develop smarter learning algorithms. We've talked about adding a data scientist to our team, further on down the road after our CTO. But it's basically about getting smarter with what you have and doing more. And so we call it more smart learning algorithms than AI.
Okay. And you did mention the senior exchange. Is there a target or a timeline you're setting for yourselves to try to get to that senior exchange? Or
Yeah, so our internal target is 2020.
Wow. Okay.
So by the end of the year, yeah. So, basically to qualify, we've got the revenue. We would need to do an equity raise to kind of align with an acquisition, and then we're there. So, the goal of getting there is to improve, obviously, the liquidity, the volume, the trading, and get more retail to institutional, but to do it for the right reason. You see a lot of companies that try and list on the NASDAQ. It's a bit of a gimmick now, right? We're going to go for our NASDAQ listing. Well, you got to have the structures, the accounting, the finance in place before you do that. So we think we're one solid acquisition away from a listing.
Wow.
And we've got line of sight on that for next year.
Okay, great. And what is the best way for shareholders to get in contact with you if they wanted to learn more about the company?
Absolutely. So paul@kontrolenergy.com is my email, or admin@kontrolenergy.com for general questions. If you go to our website, we've got a live chat section. So if they want a live chat, that's available as well. So yeah, anyone who wants to reach out, we're happy to chat.
Okay, great. Well, we've been live for 33 minutes. So I know you're a busy man. I'm going to let you go. Thank you for your time today. I wish you all the luck in your future endeavors. Our entire community will be watching you very, very closely.
Excellent.
And continue all the great work. This is Paul Ghezzi, the CEO of Kontrol Energy Corp. Have a great day and keep up the great work.
Thanks for your time. Thank you.